How's it going, everybody? It's Stas here. So in this video, we're going to be breaking down one stock that I'm going to be buying hand over fist during the next stock market crash. Whether that crash happens tomorrow, 5 months from now, 5 years from now, nobody knows when the heck it's going to happen. But again, all I know for sure is I'm going to be buying this stock hand over fist. So in this video, we're going to break down some financials, some charts, my thoughts on the current valuation. So sit back, relax, take a sip of your coffee, go down below, grab your $50 from M1 Finance. I'm telling you guys, it's $50 free, and this runs out in September. So make sure you grab it, link down below, and you guys could check out my Patreon for all my buys, sells, call outs, a morning update video, and more access to me. All of that's on Patreon, link down below. And with that being said, let's get right into the video. And no, I'm not going to wait till the end of the video to tell you guys what the stock is. I hate when YouTubers do that. I'm going to tell you right now. The stock is ticker symbol, and I'm sure all of you guys know this stock, and many of you all probably use their products. It's ticker symbol ADBE, also known as Adobe. And I'll be the first to tell you, I've been using their products for years. Not only for this YouTube channel, I use Photoshop every single day to make the wonderful, ridiculous thumbnails that you see on my channel. But a couple of years ago, when I was more into editing videos, not for this channel, but just doing random videos, I would use Premiere, I'd use After Effects, and they have so many other products, Illustrator, and the list goes on. There's a bunch that you can buy and just pay monthly for. In other words, they are a subscription-based company, right? And this stock, if you look at the chart here, this is the 3-year weekly chart. It has gone up an astronomical amount over the past 3 years. This stock was $200 in December of 2018, and now it just hit $638. That's an annualized return of what? 100%. It's gone up 3 times in 3 years. That is ridiculous, right? So when it comes down to investing, trading is completely different, right? Trading, we're looking at technicals, moving averages, volume, RSI, all that good stuff. But when it comes down to long-term investing, when you want to buy a stock and hold it for 5, 10, 15 years, you don't want to just pay any price for that stock. This is the crazy thing about the stock market. I feel like the stock market is the only place where people go and they're willing to pay anything, right? They'll pay anything for any stock, but when they go buy clothes, they're looking for deals. When they want to buy a car, they're looking for deals. But when it comes to the stock market, they're not doing that. So the number one fundamental thing for long-term investing is buying at an attractive price where you believe you can make a specific return over time based on the revenues the company's bringing in, profits, free cash flow, all that good stuff. So in my opinion, right now, Adobe is way overvalued. I mean, their trailing 12-month PE is 55, which is pretty high up there. Their forward PE is 45. So the next 12 months, they believe their PE is going to be 45. Still pretty high. And their price to sales is very high. It's at 21. So it's overvalued right now. No doubt about it. And again, it's up 3x over the past couple of years. So let's hop into this software that I personally use. I want to show you all some financials, what's been going on with this business under the hood. And a lot of people don't even look at these financials when they invest. They just blindly buy stocks and they have no idea what the heck's going on under the hood of the company, which is extremely important. You guys can see down here, market cap, I'm looking at the bottom left, is 300 billion, P's at 54, like I said, and they do have a pretty high profit margin considering they are a software business, they are a subscription model business, so there's not too crazy of a cost involved. So they're making 38% profit margin trailing 12 months, and the gross profit margin is 88%. Holy crap, that is insane. And you guys can see here the 5-year average free cash flow is $4.11 billion. Not too bad. The free cash flow for the trailing 12 months, 6.6 billion. And when we look at the financials here, let me pull up the income statement, and let me make sure you guys can see this stuff. Yep, you can. The operating revenue, and let me make this annually. The operating revenue, look at the top line here, and this goes back 10 years. Look at the growth. I mean, from 2011 to 2015, they didn't grow much at all. If you guys look here, from 4.2 billion in 2011 in revenue to about 4.8 billion in 2015, that's not much growth at all. But as they went more subscription-based, monthly paying, they started exploding from 4.8 in 2015 to 5.8 in 2016, to 7.3 in 2017, 9 bill in 2018, 11.1 in 2019, and now in 2020, they had a record year for sales, almost $13 billion. So there's a lot of growth, no doubt about it, in this company. And if we go down a bit more, let's take a look here at their profit. Look at this line right here, net income, right? Their net income has been growing as well, from 2011 to where we are now, and especially over the past 5 years, from 1.1 bill, 1.7 bill, 2.6 bill, 2.9 bill, and in 2020, their net income exploded to $5.2 billion. And if I pull up the balance sheet, another thing I like looking at when I'm analyzing stocks and companies, looking under the hood here, is their cash. Number one is their cash, their total current assets, and their total current liabilities. Very, very important. So in this case, they have a good amount of cash, about $849 million, and that's been growing over the past couple of years. That's great. And they have a lot of cash and cash equivalents, and we have short-term investments. So overall, look at this line right here, cash and short-term investments. They have about $6 billion right now as of 2020, and they've been growing year over year over the past couple of years. That's great. And another thing I like looking at is total current assets over total current liability. So right now they have 8.15 billion total current assets, and total current liabilities is, where is that at? 5.51 billion. So they could pay off their current liabilities with their current assets, which is a very good sign of a, stable, financially healthy company. I mean, look, if they had 8 billion in total current assets and let's say 50 billion in total current liabilities, I'd be nervous. That would not be good whatsoever. That'd be a huge red flag. So another thing I like about this software is we can see the stock analyzer tool. So I'm going to show you guys exactly what I'm going to be looking at here. And this allows us to put in, different assumptions for this, this stock, and it'll give us prices that we should be willing to pay. And full disclosure, this software is called the Everything Money Software. It's a YouTube channel out there, and no, they don't sponsor me. They might make some sales off this video for all I know. I don't really care. And they don't give me any money. I just genuinely like this software, and I like spreading good information out there to my people, guys. And I personally pay for this every month, and I use it myself. So shout out to them over there. And we can put in numbers, different assumptions, so we can see what we'd be willing to pay for Adobe. So revenue growth. You guys can see here the 1 year, 5 year, 10-year revenue growth annualized here for Adobe. And we're going to do different assumptions, low assumption, mid, and high. So I'm going to run through this with you guys very quickly. So let's say on the low end, they grow 12%, mid-range, they grow 15%, and let's go 20% on the high end. And I'm going to be pretty conservative. I'm not going to do ridiculous numbers. And share change. This is huge. The change to the shares outstanding. Of course, if a company is issuing shares out there, you know what? The value of the stock is going to go down. And in this case, they haven't been issuing shares. In fact, they've been buying back shares, hence why there's a negative number here. So on the low end, we're going to do 0. On the medium end, let's do negative 0.5 -5, and on the high end, let's do -1. So that'd be nice. And the profit margin, we're going to do, let's just do in line what they have here, 25% on the low end, 30% in the mid, and then 35% on the high end. Free cash flow as percentage of revenue, let's do maybe 30 on the low end, 35 mid end, and then 40 on the high end, which is being a bit conservative there. And the PE, guys, let's do 20 on the low end, 25 high end, maybe 30, and then price free cash flow, let's do 15, maybe 20 and 25. And you could play with these numbers, and they're going to give you different prices to buy the stock at. So let's do desired annual return of 15% on the low end, or the high end rather, and you do these from higher to lower. You guys can see that at the bottom left here with desired annual return. We'll do 12% mid and then 10% here. Then we'll click analyze, and it will tell us based on our assumptions what we should be paying for the stock. And if it's red, that means the stock price is above this that level already, and if it's green, that means it's a buy pretty much. So the stock right now is at 630, and clearly, I mean, it's overvalued based on our assumptions, and I believe that P might be even a bit lofty. So let's drop the P down 15, 20, 25, click analyze, and then boom. This is overvalued, guys. For me, I'd be willing to pay anywhere for Adobe between $250 to $300 per share. That's what I'd be comfortable with to make anywhere from 12-15% per year. That'd be the ideal price right there. So that means, yes, you got it right, Adobe's got to drop 50% from where we are now for me to consider it a decent investment. And who knows, if it goes to 400, I might start averaging in a bit, 350, I might start averaging in a bit, and we'll take it from there. So overall, guys, this is a stock that I want to buy hand over fist when the time is right. And right now, the time is not right. And if you ask yourself, or you're probably saying to yourself, Stas, there's no way Adobe's going to go back to 300. You're living in a pipe dream right now. The truth is, it was just 400 like 4 months ago. I mean, this stock is way overvalued. It was 420 back in March. And why would it run up 40% in 4 or 5 months? I mean, the revenue didn't grow 40%. That's just a sign that the stock is running ahead of itself, and it will correct. At some point, it will correct. You guys have to realize, stocks, especially individual high growth stocks, they fall more than the overall markets when the markets collapse. So let's say, for example, S&P 500 drops 20%. You better believe Adobe is going to be down 25, maybe 30, 35%. And that is where we'll start. Well, not us, because I'm not a financial advisor. Me, I'll be interested in averaging in. And this company is just great. It's growing. Subscription model's awesome. I love the product. I use the product. And the moat is incredible. I don't see any competitors out there within 50 miles of Adobe. And I don't even know any competitors they have. I mean, come on. Adobe's great. So that's pretty much it, guys. I hope you all enjoyed the video. If you did, hit the like button, subscribe. Let me know your thoughts down below in the comments on Adobe. I'd love to know. And if you all want to support me a bit further and you want more access to me throughout the day, my real-time buys, sells, call-outs, exclusive content, and a morning update video every day, check out my Patreon link down below, or you guys can go to StasSurfS.com/Patreon. That's StasSurfS.com/Patreon. Make sure to also get your $50 from M1 Finance, your 2 stocks up to $1,600 from Webull. All of those are linked down below. Thanks again for tuning in. I'll catch you all in the next video. Keep crushing the markets. Stay safe out there, guys. Peace out.